In 22.3, we will be working on a statement of stockholders' equity as well as a balance sheet. So this is very similar to yesterday's, where most of our numbers are just coming here from the worksheet. So that is where you'll need to refer to get your answers for the on your own. So we're starting out here with our statement of stockholders' equity. The first line is always our company name. This is Webster Corporation. Next line is the name of our document, so it's statement of stockholders' equity. And last is our date, so this is for year ended, December 31st. And then here on this first line with just the $10 par value, we don't put anything in there. Next is on January 1st, we issued 9,000 shares. We just take 9,000 times $10. So in the middle column here, we'll have 90,000. Then issued during the current year was 1,000 shares, so 1,000 times 10. And that would be 10,000. And then the balance of our 10,000 shares, we're just adding these two together. So that would be 100,000. And then we have our retained earnings. So first our balance for January 1st. And this will come from retained earnings here. Okay, so we're on retained earnings, so the balance January 1 is your trial balance. So middle column, 59,241.54 cents. Then our net income after federal income tax, so that's labeled in the worksheet. So $75,425.83. Then our dividends declared, once again on the worksheet. First column here, 43,200. And so then we're going to take our net income minus our dividends, and back in the middle column, get $32,225.83. Then we're going to add these two together and put it in the third column, so $91,467.37. And then we will add these two balances together. So our total stockholders' equity is $191,467.37. And that's our statement of stockholders' equity. Now for our balance sheet, we'll do the same thing. All of these numbers are coming from the worksheet they give us there in the instructions from the balance sheet columns. So Webster Corporation, balance sheet, December 31st. And this is going to be our main heading, so assets. And this is kind of a subheading of current assets. And so our first one is cash. Middle column, $90,052.23. Next is petty cash. Middle column, $300. Next, notes receivable. Middle column, $10,952. Next is interest receivable, $275. Then we have accounts receivable. First column, $70,094.10. Then less allowance for uncollectible accounts. First column, $7,394.64. Next line is merchandise inventory. Sorry, before that we need to subtract these two. And so we have $62,699.46. Okay, now merchandise inventory, middle column, $90,116.30. Then supplies, middle column, $252.08. Then prepaid insurance, middle column, $3,071.60. And then we'll have total current assets. So we're going to add everything up in our middle column, put it here in the third column. So we have $257,718.67. Then next is a subheading here of plant assets. Then the first one is office equipment. First column, $27,940. Next is less accumulated depreciation office equipment. So first column, $9,535. So then we will have $27,000 minus $9,000. Put that total here in the middle column, $18,405. Okay, next is store equipment. First column, $22,199.20. Next line is less accumulated depreciation store equipment. First column, $8,058. No cents. Then we will subtract these two. Middle column, $14,141.20. Next line is total plant assets. We're going to add our two numbers here up in the middle and get $32,546.20. Then our next line is going to be total assets. And so we're going to add up just our two numbers here. So we will have $290,264.87. Okay, then our next section is liabilities. And first subheading is current liabilities. And for this, we'll just go ahead and list them all, and then all of our amounts will just go in the middle column. So we have notes payable, interest payable, accounts payable, employee income tax payable, federal income tax payable, Social Security tax payable, Medicare tax payable, sales tax payable, unemployment tax payable federal, then unemployment tax payable state, health insurance premiums payable, and our last one here is dividends payable. Okay, now I'm going to come up to my notes payable line. Middle column, $14,400, $555.16. Accounts payable is $60,116.18. $1,652.40. $1,752.70. Social Security, $1,549.19. Medicare tax payable, $357.51. Sales tax, $6,652.60. Our federal unemployment tax is $33.44. State is $225.72. Health insurance, $702.60. Dividends payable, $10,800. And then our next line here is total liabilities. And so we'll add all those up. Third column, $98,797.50. And then our last section here is stockholders' equity. And so first we have our capital stock. Okay, remember we have that calculated here, so capital stock total was 100,000. So in the middle column there, 100,000. Then the next line is retained earnings. Middle column, $91,467.37. That also came from up here. Okay, our ending balance here for December 31st. And then we have total stockholders' equity. So just adding these two together. Third column, $191,467.37. And then our last line here is total liabilities and stockholders' equity. We're just going to add those two together and get $290,264.80. Okay, then the last thing that we have to do is calculate our working capital as well as our corporation working capital and current ratio. And so we're just going to do that here. Okay, to calculate our working capital, you take your current assets, okay, make sure you're getting the current total, minus current liabilities. In this case, we just have the total liabilities. So we'll subtract those two, get $158,921.17. So it's not less than $150,000 to be acceptable, so positive yes, and therefore none is needed for a recommended action. Current ratio, using the same numbers, only this time we are dividing. So current assets divided by current liabilities. We're going to get 2.61 to 1. So yes, that would be acceptable. So once again, none. So we now have that completed. You can go ahead and start on 22.3 on your own.